Well, welcome back to Financial Accounting 1. And the purpose of this second little mini lecture on the exam review is to go over the solutions for the take-home part of the exam. So there was 5 questions. The first one was worth 12, and the next 4 were worth 10. So we'll take them one by one. So first thing you had to do was to do journal entries for a bunch of routine entries. Remember, we introduced the accounting equation, introduced accounting in Chapter 1. Chapter 2, we recorded how to record things in journals. So we learned how to journalize transactions. So we were given these transactions in January for the 1st through the 8th. And to get full credit for this one, you had to show the correct transaction. And you had to put it in correct form. I emphasized, if you screwed up your format, I only took off for the first question. I didn't take off for the other questions if you didn't use the right format. But when we say general journal format, what you got to do is look at the first entry. It's a debit to cash and a credit to Todd Crawford Capital. So you've got to put the debit first, and then you've got to indent and then show the credit. And it's got to look like this, okay? So if you did something other than this, and in terms of format, if you see I wrote format on your paper, that meant that you did not put these in the correct general journal format. So these were all routine transactions. So the first one is a debit to cash, a credit to Todd Crawford Capital. That's the original investment in the company. Then you have cash revenues, cash received for revenues. So a debit cash, credit revenues, $9,500. Next one is the sale on account, debit accounts receivable, credit revenues, $4,200. Next is the payment of advertising. So you debit the expense, advertising expense, you credit cash. Next one is a collection from customers on account. So you debit cash and credit accounts receivable. Next one, the owner took money out for personal use. So when the owner takes money out for personal use, he used the drawing account, not directly to capital. So it's Todd Crawford drawing, $1,010 and a credit to cash. Next one is a purchase of supplies on account. So we debit supplies, we credit accounts payable. And the next one is the payment of a utility bill, debit utilities expense, credit cash. So most of you had the right entries. Where some of you screwed up is you didn't put it in the right format, or you didn't show both parts of the entry. Remember, each journal entry has both a debit and a credit. Okay, so those are the transactions here. It's the 1st through the 8th. So again, get used to putting things in general journal format. You got to put the debit first, and you indent and show the credit. Every journal entry has both a debit and a credit, and they have to equal one another. All right, second entry is information. This has to do with Chapter 3, which is the adjusting entries. So you had adjusting entries for salary in A, and then in B, you had the payment of the salaries on February 4th. C, you had depreciation, and you had to figure out the depreciation for the month of January. So you take the annual depreciation, divide by 12. And then the last one, you had to figure out how much supplies were actually used up. So you take a look at the balance in the supplies account, and you subtract out the inventory on hand. The difference must be the amount that was used up. So for the first one, the salaries are paid every 2 weeks, and it's Monday through Friday, so you got 5 days in a work week. And then what happens is you have to make an adjusting entry at January 31st, which is Monday, and that assuming the previous payday was on the 21st. So you've actually got 5 days worth of salary from the week following January 21st, and you've got the following Monday. So you've actually got 6 days. Okay, so 6 days times $6.45 a day. So it's a debit to wages expense and a credit to wages payable. So that was the adjusting entry. And then B, journalize the entry to record the payroll on February 4th. So the payroll on February 4th, you've got 4 days, because again, it's Monday through Friday, and it's a 2-week period. So you've already accrued 6 days. So you got 4 days of additional salary expense that wasn't accrued. So it's 4 times 645, which gives you 2,580. And then you've got also debit for the amount of the accrual that you had set up on January 31st. So you're paying $6,450, but of that amount, $3,870 was for the previous month in January, and the rest is the February expense. So when you make the salary payment, you've got to allocate it between salaries payable and wages payable and wages expense. So the depreciation, it's the annual depreciation, so you got to divide that by 12. So the depreciation per month is a debit to depreciation expense, $3,300, and a credit to accumulated depreciation. And then the last one for the office supplies, you had 3,755 was in the balance of the account, and you did a physical count of the supplies, and there was only 635 on hand. So therefore, the amount that was used up must have been 3,120. So debit office supplies expense and credit office supplies. So those are the adjusting entries. The adjusting entries are all very similar. One we didn't have there, we didn't have the one for deferred, unpaid or unearned revenue. So we could have had an example of, they received rent in advance, and you had to figure, and they originally recorded as a liability. You would have had to figure out how much of that rent was actually earned, and you would have done that by debiting unearned rent and crediting rent income. But based on these entries, these are this information here, A through D. These are the actual entries that you needed to make. You needed to put them in, get full credit. You had to put them in general journal format. You had to have the numbers right. So, if you screwed up the numbers, but you had the accounts right, I gave you partial credit on that. The next one was the vertical analysis. And vertical analysis means you take the numbers on the financial statements and you express them in percentages. So the really correct format on this thing was you should have taken the years and then put the percentages right next to them for both years. Many of you split this out where you just gave me percentages, and I didn't necessarily mark this wrong, but this is what it should be going forward. It should be the year followed by the percent, the year followed by the percent. So, and when you did this, I wasn't just looking for, the fees earned and the fact that expenses were 60.4% in year 2 and 62.8 in year 1. I was looking for the detail in terms of the accounts as well. So if I wrote detail, that meant that you missed the boat here and that you didn't give me the detail about, because these expenses in terms of what's favorable, what's unfavorable, went in different directions. So here in terms of format is what it should have looked like. And then when you get when I say detail, that means you didn't give me the detail. So while you had both favorable and unfavorable changes, so you had wages expense went from 30.8% up to 32.3%. So that is unfavorable when you get increases in wages as a percentage of sales. But you had a decrease in supplies expense. Supplies expense went down as a percentage of sales, and miscellaneous expense went down as a percentage of sale as well. So those two were positive. Rent was pretty stable. You look at the rent, it was 15.5%, and then it went up to 15.7%. That's, not much of a change. And overall, what you had is overall it was favorable. Yes. So some of you just jumped on the fact that, the profitability, net income as a percentage of sales went from 37.2 up to 39.6. But if I wrote on your paper detail, that meant you didn't tell me what was unfavorable and what was favorable with regard to the individual components of the expense. And then the part C, what additional information would enhance the analysis? So some of you had quite a shopping list of additional information, which I didn't disagree with. But the main thing that you want to do is you want to get some type of industry average. So what is the percentage of wages in this industry, or which is typical, or what is the percentage of net income to sales in this industry? So the main thing that you want there is some industry averages for C. Okay, so if you get everything and you mentioned the industry averages and you got the detail, you got the full 10 points. If you didn't give me the detail and you didn't tell me about the industry averages, then you lost either a point or two, depending upon how well you did with the rest of the problem. All right, the next one, you have to do the closing entries. All right. Now I got some interesting responses on this thing. So we did the way we showed the journal entry. Some of you used income summary account, which must have reflected something you had learned in a previous accounting course. We didn't teach using income summary here. There were basically two closing entries. First closing entry closed out revenue and expenses, and the difference between the revenue and expenses was either a credit to income if the revenues were a credit to capital if the revenues were larger than the expenses. Or in the case that we had here, since the expenses were larger than the revenue, you ended up with a debit to capital. So there were two entries. First entry was to close out the revenues and expenses. So you debit the revenue account for 41.5. You credit all the individual expense accounts. Okay, some of you had these reversed. Okay, so you had the right number, you had the right accounts, but you had them reversed, which is not good. Okay? Revenue has a credit balance, so if you want to close it out, you got to debit it. Expenses have debit balances, so if you want to close them out, you got to credit it. And notice here there is a difference between the total revenues of 41.5 and the total of all the expenses. The expenses are actually larger than the revenues by 5,865, which is why we got a debit to capital. So what ends up happening is the difference between the revenue and the expenses, which is either the net income or net loss. If it's a net loss, it's a debit to capital. If it was net income, you'd have a credit to capital. Here we had a net loss, so it's a debit to capital. So there's your first closing entry. Your second closing entry would be to close out the drawing account, and that has a debit balance. So you would credit that to close it out, and you would debit capital. So at the end of the day, the difference between the revenue and expenses ends up, in this case, being a reduction of capital, and the owner taking money out for personal use ends up being a reduction of capital as well. Right? Some of you used income summary, and I didn't mark you wrong. So like you would have debited revenue for 41.5 and credited income summary. And then for the expenses, you would have debited income summary and credited the individual expenses. Assuming you then closed out the balance of income summary, which was 5,865 capital, I gave you full credit for it. But some of you used the income summary, and then what you ended up doing is you ended up making two entries. So you ended up debiting capital twice. So so I didn't take off if you used income summary. What I did take off if you used income summary is if you had the transaction incorrect in terms of the closing out of income summary to capital. Right? So there should have been the closing entries, close out the revenue and expenses, difference being a debit to capital because it was a loss, and a closing out the drawing account. And 29, the last one here, is to do a simple income statement. So where people got screwed up here is you didn't recognize what was a revenue and what was an expense. Accumulated depreciation is a balance sheet account. That's not a revenue account or an expense account. So you've got fees earned, you got depreciation, you got rent. Prepaid insurance is not an expense account. Prepaid insurance is insurance paid in advance. Supplies is not an expense account. It's the amount of supplies you have on hand at the end of the period. So to get full credit on this, you had to put the name of the company, you had to put income statement, and then you had to put the revenues, which was 78,000 minus the total of all the expenses. And the sequence of the expenses, you're supposed to start with the largest expense first, and then work your way down the line. And the last one would have been miscellaneous expense. You didn't have miscellaneous expense in this case. So your net income is 34,950. If you had a number other than 34,950, that meant you had something else for revenues. Maybe you included other things in revenues that you shouldn't have, or you included the wrong items in the expenses. Okay, so there were things up here that were given to you that were not income statement accounts; they were balance sheet accounts. And those of you who made errors, you would have included some of those balance sheet accounts in the income statement. The income statement should just show revenue minus expenses. You don't show the balance sheet accounts on the income statement. All right, so that's it. So again, the first one, which had the most detail, this was worth 12 points, and then each of the other ones was worth 10. And to get full credit, you would have had to respond to all the questions in the format that I showed you here. Okay. All right, so I hope you found that review useful, and I hope you learned in terms of the types of exams going forward. It will be a combination of multiple choice and short problems, which you notice the problems are probably very similar to what we do in class and what we do in the homework. I also would say that it looks like in general, not in all cases, but in general, people did better on the take-home part than they did on the multiple choice part. So again, I encourage you as part of your preparation for the exam, spend time with the diagnostic exercises, spend time with the practice multiple choice, and you'll find if you do that it'll bear fruit, and you're likely to get a higher score in terms of the multiple choice questions. Okay, so adios, au revoir, hasta luego. I hope you found that review useful, and I look forward to finishing up our discussion of Chapter 5. Be well, everybody. Bye-bye.